Hi, this is Riyash and welcome to my channel. In order to get most out of this video, you need to watch this till the end. Okay, so let's get started. So before we start, let me ask you something. Why do most traders fail? If you ask around, you will hear all such sorts of answers. The market's rigged, the big players hunt your stop losses, you just need a better indicator. But after watching a lot of people trade over the years, I can tell you the real reason is much simpler and much more uncomfortable. Most traders don't fail because the market is unbeatable. They fail because they walk into the same small set of traps again and again without ever realizing they are doing it. And here is the thing, these traps don't feel like mistakes while you are making them. Every single one of them feels reasonable in the moment. That's exactly why they are so dangerous. So, in this video, part 1 of our trading and vibration series, here at the Nifty Cycles, I am going to lay out 4 steps, 4 traps that destroy more accounts than anything else. We will look at each of one actually is, why it kills your accounts, and how to step around it. Okay? And right at the end, I will put all 4 together into the 3 simple rules you can hold on to. Stay with me because that final summary is the part you will want to write it down. Okay. So before we touch a single trap, I need to plant one idea in your head because everything else builds on it. And I want to do is with a picture you already understand, a business. Imagine a company that earns 2 millions in the first year, 3 millions in the second, 5 million in the third. That's a strong, healthy business, right? Obviously, it's growing nicely. Now, would the owner stand up and tell you that the next year he projects or he expects the 500 million? Of course not, right? You would laugh him out of the room. Based on his rate of growth, maybe he is looking for 7, 8, or 10 million. That's realistic. 500 million is so far out of range, it's almost a different universe. It's too big a vibrational jump. So, trading obeys that exact same law. When you start out, you are operating at a certain level, a certain range. You can't skip 10 levels overnight just because you want to or because you need money. The way it actually works is you start small, you gain real experience over time, and you let your account grow on itself. As it grows, your capacity to handle the size and the pressure grows with it, and the success starts to compound. The 2 numbers on this slide are the foundation of what whole process. First, get your system to 80% of the accuracy or better, like the system we are using here today. The WD GAN system, it has the accuracy of more than 80%. Okay. Second, when you start, risk 1% of your account or less per trade. Tiny, almost uncomfortably small. So keep both of these numbers in your mind as we go because, and this is the key, every one of your 4 traps we are about to cover is really just a violation of one of these 2 principles. Let's see how that happens. So, this is the number 1 trap, junk system, no money management. Right? The trap number 1, This is the most common of all, and honestly, it's the disaster waiting to happen. Picture this trader. This system wins maybe 60% of the time or less. That's barely better than a coin flip, right? And on top of that, weakage. There's no money management at all, no fixed position size, no minimum risk per day, no plan for what happens when the things go wrong, right? Now, here is why this is so deadly, and it's not what the most people think. The problem isn't one bad trade. Anyone can survive one loss. The problem is losing streak, and the losing streaks are not a maybe, they are a guarantee. Every system, even the great ones, hits a run of losses eventually. But when your edge is weak and you have no risk control underneath it, that normal expected losing streak doesn't just dent your account, it compounds into something that ends it, right? You are bleeding from a wound with nothing to stop it. Most of the accounts doesn't blow up in a dramatic single moment. It gets around down trade by trade until there is nothing left. Some people do over trading. So how do you avoid it? Right? Is there any way to get around it? Two things. First, refuse to trade any edge that's below roughly 80% accuracy. If the system can't clear the bar in testing, it's not ready. Full stop. Period. Secondly, define your position size and your maximum risk before the first trade. Not in the heat of the moment, but in advance, in writing. Because here is the bottom line, a weak edge with no risk rules is not a strategy. It's just exposure with extra steps. Learn WD GAN system, which has more than 80% of accuracy. You will be glad that you did it. Right? Let's move on. So even if you have a good system, right, then the people have the reckless confidence in it. Trap number two is one of the catches the people who actually did the work, which it makes it so painful to watch. This trader built a genuinely good system, 80% accuracy or better. They put in the hours, they tested it, and it's a solid. So far, so good, right? But then something shifts because the system is good. They start to feel like they have figured out the whole thing out. They know everything now. The confidence tips over into recklessness. And so instead of risking 1%, they start risking 20% or even more. Even I have seen people risking 100% on a single trade. Right? And that right there is the killer. Think back to our business example. This is the owner of that 2, 3, 5 million company suddenly declaring he is going to make 500 million next year. The size is just widely out of range of where this trader actually is. The system might be excellent, but their account, their experience, their emotional readiness to handle more than 20% of the swing, none of that has caught up yet. So what happens? They hit a normal losing trade or two in a row and the quarter and half of their account is just gone. A good system did not save them because they violated the size principle. And we need to fix this in our mind. The fix is to separate two things in the mind permanently. A good system does not give you the license to make the oversized bets. Right? Those are two completely different skills. You scale your risk up gradually, and only your equity curve actually proves itself over the time. Survival always comes first. Say that to yourself, survival first. The size of the trades is something you earn slowly. Okay? It's not something, it's never you just assume because you feel confident about that trade, right? Let's move on to the next one. Some people, they do not have any system to trade. They just trade on the instinct because some of his friends are taking those trades, or on some tips what they see on the news channel. This one is very, very fatal. That's why I have labeled it as the trap number 3. This is the no system trading on the instinct. It's very fatal. Here is the trader that has no system at all. There are no rules. It's pure gut feeling, pure instinct, pure reaction to whatever the chart happens to be doing in that second. They see on the screen, on the chart, it's green and they feel like buying. They see red and it's panic. Every decision is improvised on the spot, right? Now, why this is so fatal and not just risky? Because when there is no system, there is nothing to hold on to. Think about a system actually gives you. It gives you something you can measure. So you know if you are improving or getting worse. It gives you something you can test. I have seen people, they don't use the stop loss while taking the position. So they cannot measure how much they are risking on a single trade. Right? So you have a evidence, not hope. And most importantly, it gives you something to lean on when your emotions are screaming at you. And that last part matters more than anything because the exact moment you most need rules is the moment you are most afraid or most greedy. And that's precisely when instinct fails you completely. So, under pressure, instinct doesn't make you a sharp, intuitive trader, it makes you a gambler reacting to noise. So, what is the fix? The fix is to build a defined rule based system that you can actually backtest against real historical data. So you know it has the edge before you risk a rupee or dollar into it. And here is really practical gut check you can use today. If you cannot write your rule down in plain, clear words, entry, exit, risk, then you cannot trade it consistently. It only lives as a feeling in your head. It will change every time your mood changes. Get it out of your head and onto the paper. So, what I normally do before I take a trade, write down on your paper what is my risk. Right? If the trade went against me, then how much I am losing on that particular trade. I need to know beforehand. And if it goes as per my expectations, how much I will be gaining out of that trade. Right? So you need to think of all this before placing a trade. Okay. And this is the last one, which is very, very important. This is a very important trap. Okay. This is the decent, you suppose you have a decent system, you have back tested everything, but you have too many distractions in life. So this is the quiet one, and it catches a surprising number of otherwise good traders. The method here is fine. The system has a real age on paper. This person should be doing well, but life is loud. You imagine a trading desk, the phone is buzzing with the notifications, there is a pressure about the money in the background, bills, expectations, need to get this trade work. The clock is ticking, and the trader's own mind, and there is a dozen of tabs open at once in the mind. One tab is that there is an argument from this morning, okay, the thing they forgot to do, the next trade, the last loss. They skip a confirmation step here. They hesitate on an entry there. They move a stop because they weren't fully paying attention. And one slip at a time, the edge, the work, they worked so hard to build it just leaks away. And the worst part is they even don't notice it happening. They just see the results and they don't match their back test and can't figure out why it happened, right? So how do you get away from it, right? How to fix this? So the lesson here is the most important traders completely underrate. Focus is part of the system. It's not a nice to have, it's not an optional, it's a core component of your system. Focus. During your trading hours, you actively remove the noise. Silence the phone, close the tabs, protect that screen time like it's sacred, because for those hours it is. And this is the important line to remember: an edge you don't execute cleanly is an edge you don't actually have. The market doesn't pay you for having a good system. It pays you for the execution of your trade. So focus on that. I don't want to make this as a too big of a video. Okay. So let's summarize what we learned so far. Okay. So we have seen all the four traps: a junk system with no risk control, a good system wrecked by reckless size, then what we saw, the no system at all, just the instinct, and then a good system quietly sabotaged by the distraction. Now, how do you get around all four at once? So what don't need all four separate solutions for each of those traps, right? It collapses into three simple trading rules. So the rule one is the build the edge. Get your system to 80% accuracy or better before you risk real money. That single rule kills trap 1 and trap 3 on its own. Okay? Because you cannot have a junk system or no system if you have held yourself to that standard. I am not just saying that come to me and I will give you the 80% accurate system. WT Gann system has WT Gann, he himself kept an accuracy of more than 90% all throughout his life. Okay? But get any system which has more than 80% of the accuracy. Rule number 2, start small. Risk 1% of your account or less and scale up gradually as your curve proves itself out over the time. That rule handles trap to completely. It makes reckless size impossible because size is something you grow into, never something you grab. And the last rule, stay focused, cut the distractions, protect your screen time, and execute cleanly. Write down on the paper where is your stop loss before even you take a trade. That's your defense against the tap 4 because clean execution is the only thing that turns a edge onto to paper into actual equity in your account. So that's the whole thing. Make certain your system is around 80% or more than 80% or better. Stay focused and start out small. Do just those three things consistently and you will have already sidestepped what sinks the overwhelming majority of traders out there. It sounds almost too simple, and that's exactly why it works and exactly why so people actually do it. Right? We have covered a lot today. Right? If this was helpful to you, do me a favor and hit the subscribe because the part 2 of this series is coming soon and it builds directly on what we covered today. Okay? See you in the next one. Thank you. Happy trading.